What are tax planning strategies? Most people do not know what they are because most people don't tax plan. You just file a tax return. So we have a lot to talk about. First of all, what is tax planning and what is not? What are the strategies that are absolutely required? Number two, why the planning and the strategies need to happen before the income's earned or right when that income's starting to earn. You started getting some revenue and some runway. You need to have your plan in motion, not at the end of the year. And last, what you should be doing versus reacting and having a historian just file your taxes. So let's do some fun facts really quick here. Tax planning strategies, they are very intentional. They are proactive decisions made in advance to reduce taxes legally. I call it the tax trifecta. How you make money into what company, how you activate the deductions versus personal expenses that are not deductible, and then how you invest in alternatives that have big depreciation schedules. It takes all three for the right strategy. So in the Millionaire Maker, I teach these strategies of how to get in front of it, how to what I call forecast forward financially, versus how the norm, the sheepology happens is normally what you do is you make some money, you react, you hand it at the end of the year to a tax strategist or a CPA, probably not even a tax strategist, and then they historically just record what you did to yourself. But there's nothing they can really fix if you blow through that by December 31st of the tax year end. So what is tax planning and what is not? So what it is, it's choosing the right entity as you learn to make the money. So in America, you're getting into an S Corp, a C Corp, an LLC, or limited partnership. They all have a variance of tax deductions and benefits. So it's looking forward to say, this year, I plan on making 100, 200, $500,000, $1 million, $4 million. And then as you get into Q1, you do a review. Get into Q2, you do a review. By Q3, you really need to start activating either more aggressive strategies because you're actually outpacing your revenue goal, or you're way behind on your revenue goal, and you've got to shift how you're using the companies. Most companies that are well into 6 and 7 figures do not operate with one entity. Not in our strategies. They operate with a multitude that are contractually bound for the best tax strategy. And if your CPA doesn't know what I'm talking about, then you should get a gap analysis. So what I'm going to do is I'm going to give you the first 3 chapters of The Millionaire Maker. Oh, heck, I'm going to give you the whole version 2 of the book. So read The Millionaire Maker. If you have debt issues, go to page 194, and we're not really going to talk much about that until you're well into being a client. The first thing we want to talk about is your gap. Where are you and what do you want, and how do you want a new result in your life? So also what tax planning and strategies is the flow of your money, not only through the companies, but through credit cards. Put your debit cards away. It is how you're actually spending money on deductions, how you're doing auto pays. A lot of you, when you first start in strategy and planning, you still are paying bills out of your personal bank account. You cannot do that. That's commingling. You have to move the money into the right bank accounts and then pay the bills. Best to put them on auto or have it paid by a credit card, and then you have one big payment at the end of the month. So we can help realign all that. And in the way that we're doing it, we're also helping you build corporate credit, which is also part of a tax plan. So why should tax planning happen before the income's earned? It should happen because you want to start projecting and, again, forecasting forward. So many of you are used to just recording your history and journaling about what happened, the pros and cons, the SWOT analysis, the strengths, weaknesses, opportunities, threats. You want to say, this is what my revenue plan is. This is my business plan is going to project for this year. Is it $20,000 a month, $50,000 a month? And with that, how many deductions can we take if it's an LLC or S Corp? If you have a management company, that's a C Corp. Can you do officer and director benefits? And how are you doing your allowances? A lot of people won't even do allowances, even though it's a huge part of the tax code. And this year, 2026, it's vital that you really understand the Big Beautiful Bill. It gives 4 major categories of how entrepreneurs and wealth builders are going to win bigger in the tax world as long as you have a good strategy. So again, if your CPA is a historian, call our office, do a gap analysis, have a one-on-one conversation with our team, and then come to our Millionaire Intensive. I'm going to give you 2 tickets. They're in the show notes below, and start understanding what it means to live corporate life. Now, I made up the term. Our experts live this term. And living corporate life is living through your companies versus living as an individual with just a W-2 paycheck. There's not a lot of strategy in that. So the other part of planning your income is not only looking at your W-2 income, because a lot of you are employees, you get a paycheck, which means you're going to get paid, you're going to get taxed, you get allowance left. What we want you to do is move more of that income. So whether you become a consultant, you start a side hustle that becomes a hustle. The difference of a side hustle and a hustle, in my definition, is the difference between a sub six figure or a 101,000 or more. You want to go to a hustle. You're going to need the money, especially if you're employed, to hire the teams, the marketing team, the sales team, and an accounting team to help you run the company while you're at work. So without that operating company, you're going to short yourself on deductions. Some people, they love celebrating their refunds. We don't celebrate refunds. Why would you overpay on a non-interest loan to the United States government or your country's government and then get a refund back? You want to be more strategic going into it on how you spend your money, and every dollar counts. Now, if this is interesting to you, I want you to subscribe to this channel, click that notification button, be here 5 days a week. We're here all the time. We've been here for nearly 5 years, helping you understand money, a common sense conversation about money so you can put it into your family life and then start generational wealth. These companies that you're going to form and how you live corporate life, it lives on beyond you. That's the goal. The goal isn't that this is just your lifetime. This is your kids start learning it, your grandkids learn it, and through trust, you give a lot of rules of engagement of whether they're going to get the money or you give it to charity. Or I have some people who just want to spend all of their money in their lifetime. So what you should be doing instead of reacting to a tax plan or just the end of the year is really meeting quarterly, right? Come out Q1 right now. We're recording this mid-February of 2026. You should have a plan for Q1. Meet again in Q2. Are you on track? Is your revenue on track? And you want to decide where every dollar is going to go and what deductions coming off of that company as you walk through the year, not just decide on 12/31 of the year. So by the end of 2026, you should have had it planned. Every dollar that you make has a tax implication. So which company is it going into? Which deduction is going to go against it? And for those of you that are higher net worth, making more money, there's a huge piece of the tax benefit and strategy that's going to happen on how you invest. Versus a REIT on Wall Street, you're going to buy real estate and get the depreciation schedule. And this year, you're getting bonus depreciation. Instead of buying into, say, United Airlines or American Airlines stock, you're actually going to own the aircraft. Instead of buying into Exxon or Chevron stock, you're going to actually own the gas and oil well. You're going to own the working capital interest. And if you haven't seen Landman, that is an exact replica of what I'm talking about in that Permian Basin. So there's so many things you can do proactively. So the last thing I would just end with is the reason why most of you don't do it is you're not taught. All right, we're just taught to just park our money, hope a CPA can figure it out. And I love CPAs. My son just became a full-fledged one. But it's about being proactive. It's about forecasting forward, not just recording the history. So if you're interested in any of this, want to learn more, make sure you show up to our Millionaire Intensive. We do it once a month. It's about a 4 or 5 hour event, and you are we'll change your life with money. And if you have any questions, go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow.